All right, all right. You should know the drill by now. Hit up the chat. Let me know what the deal is, so that we're all, firing on the correct amount of cylinders. You know what I'm talking about. Okay, good. So let's get that rolling. Let me just flip over to this. Very interesting. Okay, interesting. All right, I'm gonna pull the chat window up so this way I could see what's shaking. Streamlink not working for me. I don't think it's supposed to start with RTSP. That I mean, I put the right link on there. If you saw the instant link, um, yeah, that'll be incorrect. However, all is fixed now, so don't worry about that. Yeah, so you should be good. Everybody should be good to go. Good to go. All right, so let's just make sure that the stream is good. I got to pull up the chat here. Make sure everybody is all super duper on the same page. So bear with me 1 second while I unfortunately do a whole bunch of things. All at the same time. Don't worry. We're going to get this thing down to like a science. And then you're going to be very, very happy. We are in the meantime, while I'm trying to figure some other stuff out. We are looking on a little bit of a buyback. Currently, been an interesting day for Bitcoin to say the least, as far as how price action has moved it around a little bit here and a little bit there. So interesting stuff. We'll talk, certainly more detail about that in just a minute. I know I'm trying. I'm really trying, guys. Hold on, bear with me. 1 second here. Okay, let's do this and this and this. Bang! What do you know? Yeah, I think we were also like 1 minute late today, so not cool. I know. I apologize. Complications. All right, so. All right, yeah, all right, so we're good. Always Bullish is here. Very nice. Demcos, that'll work. Peak indicator, yeah, it's wrong on the website, but right on the Discord. Wrong on the web. Oh, I know what I did. That's the one thing about making mistakes. If you know what you did, you can correct them. Yeah, so let's get rid of that. All right, let's do this. Yes. Let's update that. Bang, bang. Okay, there we go. All right, should be fixed. I'm just going to go ahead and send out a new notification. Of course, you guys are already here, so you don't need to hear any of that news. That's fine. Okay, that should all be fixed. Last night I had one problem. Now tonight I got a new problem. Unbelievable. Unfreaking believable. Okay, OBS looks good. Sound good. Check, check. Everything's checked. All right, good. Excellent. Okay. Got it. Okay, let's get fired up. Let's talk about what's going on here. All right. So, obviously, we're going to start with Bitcoin. The movement today was actually pretty good. Unfortunately, it was a little buying and a little selling, both, almost equidistant from the open. We do have more buying coming in currently right now. We can see that a little bit easier on the hourly chart. So I'll pop that open here. And we'll just take a look at how the trend is holding. So we drew these, little indications of, further downside, further downside. So, just like any other trend fail, it's going to act very similar. So in this case, it did as well, right? As soon as price leaves that zone, it's a short. This was a much shorter distance short, still a short nonetheless. And then, we could take this guy and copy it over, something like that. And again, you just sort of follow price. Once it fails, you're out of here. And it looks like we're trying to start a new trend now. But what I like about the last two times we did this, it did respect it. And by that, I mean it broke and closed below. It gave you the one chance to get out. It gave you two chances to get out and then gave you further downside. Same with this trend up here. Once it broke, right? It gave you 1, 2, 3 hours down, but then it did give you the one chance to get out with the retest. Retest would tell me further downside. Now, if we ladder this, which is what we could be doing, you're making essentially higher lows. All right, so boom, 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 higher lows. Again, like I like to talk about volume, it's very weak. All right, but what is it weak on? Right, this one it was strong on the sell-off, but then the next sell-off was very weak, right? And then the buyback, unfortunately, was very weak again. The push to the downside got eaten up real quick, was bullish. The push to the upside and got sold real quick was bearish. So, this is one of those times where that daily candle, really represents that intraday trading. It's a spinning top, indecision candle. Nobody wins, nobody loses, nobody does anything. Now, what we have seen in the past, and this is for any asset at all, spinning top, after a big impulse move would be a hesitation candle before further downside. All right, so you kind of get like a big move down or a big move up, and then you sort of go sideways for a day or two, and then you just continue that move in a very unpleasant way. And that's similar to this. Now, this is a good push down, 2 days of essentially nothing, and then two big candles down. Let's see if we can find. All right, so on the upside, right? Huge impulse move up, day of hesitation, trend continuation. All right. I'm sure we could find 1,000 different examples. Here's another one, and here's another one. Big impulse move up, 2 days, well, really 3 days of indecision, right? And then continuation. 1 day of hesitation, continuation. All right, so it's very common. And when you're not exactly in trend, we're in a local downtrend, even more so local downtrend. Okay. But because our bottoms are essentially the same, very close to the same, we're in that zone where it's very interesting one way or another. We can just as easily find support and push up because this is a very good support zone, or we could break through and test new local lows. I mean, local by like the last few weeks. All right, cool. So let's just double check this real quick. Do you expect more volume for monthly close? So the monthly close will be tomorrow. Well, here's the deal. This monthly close lands on a holiday. And, well, in the middle of a holiday weekend for Americans. So, again, this is one of those situations where we don't really know the American volume, but historically, they have not been great as far as holidays are concerned. So I don't expect a ton of volume. No. Let's check the monthly. So monthly so far, volume-wise, let's just take a look at just the volume. It's below average by a fair amount. We're currently sitting at, let's say, 247. It should be million, I suppose. So 247 million. 306 is the average. And we would have to really come up with a substantial amount of volume in the next day in order to get above average. And I just don't think that that's going to be possible. Now, another note of interest, this is Stamp, so Stamp is a little bit different. We can check XBT, except that volume is not exactly realistic. They, everybody fudges their numbers, but I think it's it might be even more so on here, but whatever. Let's just double check. So you can see, right, monthly for BitMEX is above average and has been above average, right, for God knows how long. All right, and they're talking 74 billion is the average. We're currently at 99 billion on XBT. So, I guess it's wherever you pull your your data from is what's going to work for you. We'll definitely talk more in depth about this tomorrow night as we approach the monthly candle close, and then the very next night is the weekly candle close. So very exciting weekend for everybody. Very exciting. So hopefully you are as excited as I am because love this stuff. Love this stuff. Today was opportunities both ways, but you really had to watch the market. We talked about these levels in the update. As far as a full-on retest, coming back and solidifying that this was once support and is now resistance. Also, the trend down, the local trend, that's this guy right here. All right. Working that guy down as a drop. Now, the thing about that is it wouldn't be a flip, right? So there's no retest here because we never broke and closed above it. It would just be a focal point for when price does come up. Are we going to see a reaction on that line, and are we going to be able to break through it? What I wanted to see was the confluence area, which would have been basically this zone right here, which would have handled the trend, your other trend coming down, an actual retest. It would have been a retest of the 100 MA on the daily. So I'll throw that on for you right here. It'll be the blue one. That's this guy. So the 100 MA, the 90 MA, your old support zone that fell through, your 70 EMA popped in the same spot. It would have just been, all glorious when it comes to technical analysis because there was just so much confluence in that spot. Not to say it can't make it there in the next few hours. It absolutely can. We've seen candles like this that move, $400. We've seen candles that move $1,000. So it's really, for Bitcoin, it's really no big deal. And it is something that you're still actively looking at. We talked about the tweezer bottom, 0.32%. So technically speaking, it's supposed to be identical. I've sort of adapted a 2% and under. Seems to play out just fine. And this is well within that range, 0.32%. So 1.7 with a buffer zone. I'll call that a tweezer bottom. Tweezer bottoms generally bullish. Look to see a few days of buying. That would absolutely put us in this ballpark here if we got it today. So still looking at that. Intra, you're looking for those pattern breakdowns that we just looked at on the hourly. So and that's not even a pattern. That's just simply a trend, a stair step trend fail is all it is. Are we painting patterns? Yeah, absolutely. We're well within a channel right now that we could draw on the screen if you want to see it. This is considered a diamond right here. So you got your far left, down, far right, and far top. So this would be a diamond over here, very local. And because the preceding price action was below it, it'd be considered a diamond top. Wouldn't put much validity in a 1 hour diamond top coming off of a downtrend, but be that as it may. You are now testing or about to test a 20 MA. That's on the downside, but we have pushed price above it on the hourly, which is good. But look at the daily again. Look at where we hit. All right, so we talked about this earlier on whether this 100 EMA is going to be valid or not. And it looks like it stepped up to the plate today and knocked price down. So it's very, very, very interesting. Keep your eyes on that. Throw it on your chart and see what kind of reactions it gets. Because right now, we're using it. We kind of found support, closed up above it here, and then we opened up. It didn't really do much over here, but then this day, with a little bit of a push up, and the first guy to step to the plate and to bat it away is this 100 EMA. You got to remember on the daily, right? R9, our fast EMA is pretty far away. It's all the way up here. Okay, 99.57, and we're currently trading at 95.72. So think about that. The only EMA or MA in proximity to price on the daily was used today, and that was the 100 EMA. So cool stuff. Cool stuff. That's why we love our TA. All right, I see a lot of BTC moves from CB to unknown wallets. Let's hope it doesn't dump again. If this dump continues, I will change to always bearish. Oh, man, brutal. Listen, one of the most liberating things that you could do as a trader is to realize your bias can change with just one candle. You're not always bullish. You're not always bearish. You're not always anything. Because price action changes every candle. And one candle shows you strength in the bulls, and another candle will show you strength in the bears. And if you're stuck in a bias that's long when you should be looking short, and short when you should be looking long, you'll trap yourself into trades you don't want to be in, or you'll refuse to take trades that you should have because your overall ingrained bias was incorrect. So something to consider. I know your name might just be a joke, but I mean it's a great name. But that's from experience. I've had bias in charts where there's no way, this thing's definitely going up for sure. I'd throw the kitchen sink at it, and every indicator, the chart itself, the candlestick patterns, the volume, everything's telling me to go short, and I'm like, hell no, man. And sometimes it's your gut, and sometimes it's ignorance, right? In my case, it was, ignorance, and I went long, and everything dumped. Everything went short, and I would have been, on the winning side. It was just that I had this overall bias that was taking control of the trade, and it was, it was not good. So I'm not bullish and I'm not bearish. I am looking at price action, and I say, this is what it looks like. This is what the candles are saying. This is the story that they're telling. What makes the most sense? What is the most probable situation to happen? And then you throw the indicators on as like a confluence. This is my thesis. My thesis is we come back, we get a retest on this fail line, which is also happens to be the 100 DMA, which propped us up over here this whole time. That's my thesis. I don't want to be bullish only because of that. When I see a spinning top with a 3 candle down scenario, so these aren't the right candles, but this is psychologically considered 3 black soldiers. 3 black crows. Sorry, 3 white soldiers is up, 3 black crows is down. And a 3 black crows pattern, right, is a bearish pattern. Spinning top after a 3 black crows would consider hesitation candle to the downside. So even though this is what I would like, because if this candle closes like this, which, we're running out of time on the clock, 9 minutes left, then I would probably say further downside, right? Even though this would be juicy, and I'd love for it to be right, this would be a great area to get short, this is sort of telling me otherwise. Downward movement, continuation, okay. Now, when we talk about patterns, right, if we talk about this as a triangle, symmetrical triangle, then generally speaking, after the breakout, you do get a quick retest and then further downside. It doesn't typically take days. It could usually happen on a 1 or 4 hour chart, which it may have happened here if we zoom in and see how the break looked. If I remember right, I believe we did get it. Let's take a look real quick. No. We just violently dumped, which I think we also talked about in the update a few days ago. You know, we're so sideways, coiling up so much with such a tight range that, you know, when it's gonna move, it's gonna be violent, one way or the other. And that violence is because we see as price just sits. Let me find like a clean area here. So as price just sits in like a zone, right? This is just consider it just this neutral trading zone. And while you're there, and nothing seems to be happening, a day, 2 days, 3 days will go by, and then all of a sudden you start seeing this, you know? And you're like, what is all this? And then you're like, what is all this? What is all this? These are orders getting stacked. Okay, longs and shorts looking to take positions, right, on a quick move up or a quick move down. So because we're in this little range here, this little volatility price comes up and immediately comes back to range, right? That's a short order getting filled, and they could be taking profits right here back to range. For the people that are ping pong trading, right, they're essentially flipping longs and flipping shorts at every break. So you have the intra range, and then you have the outlier range, and the outlier range would be, within like 2% or something like that. And that's sort of like their Hail Mary. You know, it's kind of like an extra added order just in case you do get that one wick and you're, manually trading, so you're not getting stopped out on each one of these moves. And that allows you to continue trading, but with, an even better area. So as all those orders stack up and stack up and stack up, one break to either side is going to eat everything up and then just poof, right? Because you're going to liquidate the other side at the same time. So everybody that was putting long orders in down here or putting long orders in within range and they were stuck. If you ever heard of people getting trapped, this is like bull trap, bear trap. Basically, they bought here long and looking to get the big bounce, right? These are reversal traders that found something bullish, like this big eat up candle, buy me up candle. And they're like, hell yeah, we're coming back, guys. And they're stuck. They're stuck in that long and they can't get out. And even though they had this one opportunity here, they thought it was going to continue up and it didn't. So they held on to it. So now these guys have all these orders here. The problem is they get licked all the way down here. They're looking at like previous structure. Maybe they're doing 2%. Maybe they're doing 1%. Whatever they're doing, let's say they're getting licked in this ballpark. So as all of these orders start stacking, and now you got people coming down and say, okay, well, look at that doji. That doji's really good, super bullish. We just bounced off the 100 DMA again. Yeah, we're cruising here. We're getting close to the apex, rock and roll. So they layer in more orders and more orders and more orders. What happens is when you break one way, you eat up all of those liquidations, and that's why on something like the Tusky, you'll see, $1 million licked, 500,000 licked, 3 million licked. You'll see all these licks, and they'll all happen at the same time is what it looks like, because they're all basically sitting in the same area. I don't have the calculator in front of me, but if you took a position at 10,000 with 20x, right, your liquidation is essentially going to be at almost the same mark, and there's algorithms out there to figure out if new traders bought here, where would their liquidation be at 20x, and they could target that zone, and that's where you see stop hunt wicks. You'll see something like this or something like this, You got a bunch of people that are going, long essentially, right? And they're trying to get further upside, but they really know where they're going to get licked. Same thing for the shorts. So you'll see some people that'll short it, like as you climb up here, you say, all right, well, I'm going to short here, just based off of like structure and something told you that like this was the top, right? So you throw your short orders in, you have a buffer, let's say up to here, right, where you're still in the trade, and then your liquidation point is up here. And you'll see candles will literally go right to your lick, and you're like, they're watching me trade. They're spying on me. No, they're just seeing where all the buying came in, getting an average of the type of retail trader that would be there, figuring out how much leverage people typically take, and where that leverage would sit if you were to buy here. So if you bought here, leverage here, liquidation here, let's target that liquidation because we know there's liquidity. We know our orders, our big orders can get filled because you got the liquid engine, working overtime. So I hope that makes sense. Okay. Sean L. is in the house. So, ladies and gentlemen, Sean L. is in the house. Just want to let everybody know that. What do I think about the fake buy-sell walls on BitMEX? Do you use them or take note when taking a position? And let me just read this real quick. Most liberating thing would be to switch to super long time frames. One trade every 3 months. Yeah, you could be a long-term investor. You could do 90-day hold trades. Yeah, I mean that's like what we looked at last night before the stream closed. We looked at BNB, right? And I didn't even go on a weekly. I didn't look at the daily. I didn't look at the 4 hour. I didn't look at the hour. I didn't look at the 15-minute. I threw up one chart as a demonstration that the question was, at the current prices, does BNB look like a good investment or a good trade? And that's why for demonstration purposes, I'm like, I know BNB. I follow that very carefully. And the monthly chart has one very clear zone in between $14 and $17. And I said, just look at the one chart. Right, you're looking long. You're looking investment, right? So you're looking long term. Do I think it's a good investment at the current prices? No, not if I think it's going to go down another $10, and I have technical analysis to support it. Right, it may not. Whatever, it may go up right now, and then bang, we end the stream and it's at $50. It's fine. I don't have TA to support that. I do have TA to support. Break to the downside and between 14 and 17. And that would make the most sense as a purchase. So you can take away some of that intraday noise and do some longer term trades. And JC's put them up. There's a handful that are up. I don't remember what the channel is called. But just search for it, right? Just look on the left-hand side, and you'll see a channel, and it'll have long-term trades. I believe one of them currently is Decred. If I remember right, don't quote me on that. The head took a lot of hits when I was younger, so I don't want to be wrong. But yeah, you can absolutely do that. You put a portion of your capital for long-term swing trades and a portion of your capital for short-term, a portion for your capital for accumulation, a portion of your capital. You could divvy up your portfolio any way you want. So you got a lot of options. You got a lot of options. All right, but anyway, I'm getting off track here. Okay, so let's cover the daily close because it just happened literally this second. And then let's talk about the order books, right? So, we'll talk about that, and then I'll look back on chat and see what's shaking. All right. So think of your questions, comments, charts. I know someone said ETHUSD, so we will pop that up in a second. Let's just talk about the close real quick. So we Opened up at 94.90. We had a high of 9,700 even. Very interesting. Even. To like this is stamp, so that's literally to the penny. $9,700.00. All right, anyway, we hit a low of 93.50. We closed it out at 95.79. So for the day, plus $90, not even a percent, 0.95%. Again, this is a spinning top within a 3 Black Crow downtrend. This could be hesitation candle before further downside. It can also be tweezer bottom bullish to the upside. So you can see how difficult it becomes when you don't have a defined trend, right? We could look at this trend, and clearly it's a local down, right? You have a high, a low, a lower high, a lower low, all right? So, you know, as long as you're trading underneath 11,000, you're basically clear to paint any other candle you want. So long as it's lower than 11, you're still within a local downtrend. When you get into these support zones and you're looking for reactions, it's hard to gauge the type of reaction you're going to get. Did we get a reaction at the top of our zone? Hell yeah, we did. And it was awesome, right? So, you know, 93, I believe the candle itself was 93.20. Yeah, so the candle went down to 93.20. The top of our range is 93.33. So we dipped in, bought a little bit, and pushed up. The problem is, you know, where it actually stopped, the buying was like 9,500. So a short trade and a difficult one to manage, right? So if you're just popping in real quick scalp, buy it, push off, and as soon as you've seen a sign of weakness, you sell it off. That would have been just fine. Hold on to it for, you know, eternity just wouldn't have made any sense. So we would like to see a clearly defined move here. Now, with the MAs in mind, we have this. With the MAs in mind, that 100 MA looking like it did some work. So the 100 EMA looked like it did some work. So I'd like to see another reaction to that today. All right, so now that this candle is officially open, all of our numbers change, and now our local trend resistance line is now 99.68 instead of, you know, where it was yesterday over here at 10,000. So it's a big difference. Your EMAs, your MAs, all your moving averages are now further to the downside. So they are closer to a reaction, which in one case is good. But really, you gotta dial into, you know, the 4 hours not even going to give you a lot, but you got to dial into like the 1 hour and sort of see what's shaking here. This could very easily just come up and just be another test. Again, this is not a trend that has ever had support, right? It's never been flipped. So this is just resistance. You know, I don't want to count the times, but a lot. You know, it's just resistance. So coming back up and hitting it is not, there's no retest involved here. It's just a trend finding resistance. What we'd be looking for is like count levels. And by that, I mean touches. You know, 1, 2, we'll call that 3, 4, 5 is this cluster, 6, 7, 8. So we'll call it 8 times. And we just like we did the 100 DMA is how many times until it breaks? You know, what's the magic number? Is it going to be number 8? Is that the one that's finally going to break this line? Or is 8 going to be super strong? Now, 8 ended up being the number for the 100 DMA, which is funny that number popped in my head. But again, what's going to be the number? Now, in the hourly chart, right, we can at least see what's shaking on a more zoomed in level, like a little bit more microscopic level. And these are good little ways to take quick shorts or at least see quick price action. What I do is I take the very first one that makes the most sense and then I just copy it. I literally just, for a Mac, I just press and hold Option Command, and then, I can just do whatever the hell I want with that. Now, because we're so close, there's virtually no change. If I was zoomed out much further, because I'm in log, it would change with log, right? So if you want to do that on like a bigger chart, zoomed out a lot more, take it out of log and then do it, and then you'll sort of like define a channel. Maybe get some ideas, and then you want to put it back in log, you can do that as well, but you're going to have to like redraw some things. But I do like doing that because it does sort of show you how the bots or how some of the retail traders are reacting to these trades. But look how clean this is, right? Once you had like 3 candles find support on an upward angle, that sort of gives you the idea, okay, let me put this up. And anything above this, right, is bullish, because it's not laddering up, it's working its way up. And anything below this is bearish. And this one as well, you got a bit of a retest here, which I love to see. Again, the little retest here after you broke it, right? So you broke it here, retest here, very nice. This you broke here. This is a much longer retest, still nice. You break it, and then essentially you're short. These are hyper dangerous because you have no real indication of when it will stop, except for, trends. And you can do micro extensions, but it's almost like, what's the point? Just sort of look for price to react, like a big buying opportunity. So a big buying came here. Okay, and then you got one bullish candle, you might want to get out of the trade. Short trade, but a successful trade nonetheless. Drop back down again, 1, 2, 3. So you could have put this here since you had a few candles to respect. So it's like boom, 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 boom. Drop, big retest, go short. Unfortunately, with this one, it would have taken a long time for you to actually realize any profits. It's not, it's not 100%, but it is nice to know what's shaking. It also gives you very quick hourly glance, bullish or bearish. You know what I mean? You're under the line, you're bearish until you have a new line and you're trading above that line. And we have really yet to do that. So support on another new line here. We're getting close to the point where we might be adding something like this. We'll see how the channel actually gets defined. All right, that should be cool on Bitcoin. If it's not, just throw something in chat. We'll go back to it. But let's move on to Ethereum. Let's see. So I'm gonna take one for the team, and I'm gonna use the white template for the streams and probably in the Discord going forward, just so you can see, I guess, what's easier. All right. So that being said, every one of these charts on the template will probably be totally bare. Like it won't have any of my old, like thesis or ideas. Because I use, like, for templates, I think there's 10 of them or so, right? And they all have a reason, but whatever you draw on one does not translate over to the other. They're all, in and of themselves. So let's talk about ETH real quick. Clear, like obviously the larger scale, we came back down to lows of like $80 or so, painted highs of, 363 and came back down. The bigger picture, right, we'll get this key right here. So throw a FIB, and, for streaming purposes, we'll just keep it, somewhat generic. It's not going to be like to the penny. We just get some focal ideas here. More or less attempted the 236 and found rejection. So as far as like the bigger scale is concerned, the retrace was weak, right? A 236 retrace. It's not good, right? There's nothing special about that. Now, what do we have here, though? So for these levels, and what are we looking at for the pullback? Okay, it's a little bit more respectful. Now we have something to work on. So let me tighten this up just a bit because, we don't want to be like, we don't want way off the mark. We just don't want to spend a whole lot of extra time, for $1. It just doesn't make sense. All right. So on the daily, the big move up, the bigger picture macro view pushes us to a 706. 706 in crypto does show up quite often, which is awesome. It's a great level of support. This happens to work out just fine. It's not exactly a ton of structure. You do have this. Let's see if there's anything over here. Not too much. This would have been an ideal level up here, and that's closer to the 618. Large level of support during a much bigger move to the upside. This was also a bigger symmetrical triangle that played out, so a huge bull pennant and just smashed to the upside, which is great. This level here, it's a little bit weaker. You can see this structure was nice. So it was a rejection point early. Came back up, made a higher high. Another rejection point. All right. Came back down, made another higher low. Pushed back up, stayed underneath. So the 786 is a very interesting level as well. Look at that, just forcing price underneath it until it pushed up to make another attempt right at the 7.0. 7.0 to the 6.1. 6.1 down. Now, generally speaking, this fib, low to high, these levels are not for the price up, right? They couldn't be because you would have never known to lay the fib here while price was only right here. They're for the way down. They're for support. But the interesting is how well respected they end up being. It really is some wild stuff. One of the more fascinating things in technical analysis is Fibonacci levels and how they're respected and how people trade them. Really cool stuff. So 706, if you were to play the reversal, this would be a bounce area, right? This is basically buying the fib. And, clear and validation, more or less you give it like a percent or two and you trade underneath the 7. Then you should be targeting the 786, get out of the trade, and then you look to buy the 786. The problem is you would have gotten, like if you did it on the 5, you would have gotten burned. Did it on the 618, you would have gotten burned. Do it on the 706, you might get burned. Do it on the 786, you might get burned. You might not. So you want to look at other things and sort of see what's shaking here. So let's throw some trends on. Let's say, okay, here's our main level, right? No matter what anybody says, this is the local high. This is the swing fail. This is your validation. We're good. You could probably tighten this up a little bit to encapsulate this current price action. You don't want to bend it so far in your favor that it's unrealistic. But, trends are essentially a little bit of a work of art. So, make it work. And again, this is a situation where you could just copy it down. Now, you see the difference? We're on a much larger amount of price, and you see because we're in log, you see what happens there, right? It gets all like crazy like. Now you could throw that in. What do you call it? You could throw that in a riff, and then that would handle the situation. You could just copy paste it, and then just move it so that it looks correct. You know what I mean? This channel still is respected to an extent. I like to cover the candles that make the most sense, but I don't want to cut through everything. And if you don't have a channel, you don't have a channel. So for now, you know what? Let's just get rid of it. I'm not going to force a channel for no reason. Let's take the low side and sort of give ourselves a trend here. And now all of a sudden we have a pattern to look at, right? Very easily, 1, 2, bang, bang. Now we got a falling wedge. Simple. With the falling wedge, right, we look for a break to the upside. We're looking for a break no matter what, period, up or down. But we would like to see a break to the upside in a falling wedge, right? In a rising wedge, you typically look for a break to the downside. So this would be, bullish bias, push to the upside. If you were a super aggressive pattern trader, you would have already bought the low side support with an early entry for breakage of this level. Ethereum, Litecoin, XRP, Bcash, EOS. These coins rely heavily on Bitcoin price action, Bitcoin dominance. These are considered majors. Well, at least Ethereum, right? Ethereum and XRP and Bitcoin, right? Those are the only the only three coins in crypto over $10 million market cap. Those are like your majors. Then you have your, essentially your mid caps from, 1 million to like 10 million. And then of course you got like all your small caps, right? Essentially anything under $1 million. But I have seen other people use those terms and phrases differently and put different number sets to them. That's fine. That's how I use it. You can make an argument for another triangle here if you just drew a straight line. No need to, because you have the fibs right here. So in between the 618 and the 706, this line that the cursor's on right now, you could try to make that argument for a descending triangle. Sure, but not so much. If you were going to do that pattern, it would start here, not all the way back here. And then here, okay, sure. You'd have to tighten up the trend a little bit. But it's just heavy to the downside with not a whole lot of activity up to the top. So as far as patterns are concerned, it would be invalid to begin with. This is okay. This is coming from top side, push 1, 2, 3. We'll call that whole thing 4, 5. So it's like a 5 touch. You can even call like 6 where you start. And something like this, you can pull this little tool out here, the little 3 drives guy. And I do this a lot for charts that I'm trying to visually represent for someone who, is unfamiliar with the pattern. So price, right? Well, yeah. So actually we should do this. Right. So, I don't want to confuse you further. Let's just start at the top. Bang, bang, right? Touch to the top, touch to the bottom, touch to the top, touch to the bottom. What should happen, pattern-wise, is a breakout. Something like that. All right. Now you can also visually see like 3 drives. That's another indication. You could see the mathematical equivalent of how it's breaking down with the 139 extension and 132 extension. They're both very much the same. Just like really cool stuff. But it's one of those drawing tools that sits up here forever and it's very rarely used. But I like it. You don't have to like it. Okay. What are we looking for? A break to the upside, or clear invalidation to the downside. So a breakout at play, daily chart. Current local levels would be 177. So what we're looking for, local resistance, need to reclaim that 9 EMA. Once you break out, you're looking at resistance confluence with the 20 MA and the 618. That's currently sitting at 188. And then you got much larger resistance up to 200 MA, which is currently sitting at 201. Downside support. What do you got? Daily chart. So besides the 786, which is right here, besides that, do you have any structure? Structure 786. Structures, that's the 70. This structure here, 786, is good. Yeah, not too much in between that. So it's sort of like you either hold the 7.0 or you drop to the 7.8. All right? That's sort of what we're looking at there. Let me scope out chat, make sure I didn't miss anything here. Hey, everything changed. Interesting. Huh. I'm amusing myself right now, so don't worry about that. Let's see. Monthly close. I see a lot of people of BTC moves from CB. Oh no, we already did that. Oh yeah. We're gonna talk about order books. Okay, we'll get to that in 1 second. Let's see. Is there a way to use Is there a way to use a market stop loss on Binance? No. Stop limit only. They just closed. Yeah, we covered it. Is it still a spinning stop on the daily since it's a bit thicker body? Overall, yes. Spinning top for sure. Bullish short midterm. Well, we'll go back to BTC and look how it opened. But well, you're at indecision. So the bias as far as the three black crows into indecision would be the bias would be down, further downside. Breaking of a pattern with a retest is typical, but it's not enough to give you a bias. So downside would be, if I had to put something on it, I would say further downside. Rand BTC, could you take a look at gold? So yeah, sure. I find your chart drawings Oh, good. Oh, that's awesome. Thanks. Appreciate that. I'm long on ETH here. Okay, so you Peak, you're an aggressive trader. I like that. Very good. My fibs don't line up as yours for some reason. All right, well that's interesting. So we'll talk about the book, and then we'll talk fibs real quick, and then pop up some charts you want to look at, and then we'll take a look at some charts. So fibs, order book, yeah. I want to get ahead of myself here. Order books. Do I believe in buy and sell walls? Okay, so order flow is very interesting. The order book is pure garbage. Especially on MEX. I mean, you'd be hard pressed to find more inaccurate information than the order book on MEX. Walls go up. There's two different schools of thought when it comes to walls. I should let's see. Can we pull up a? It's just not that active. I would like to see like an actual. Like to see something here, but I don't see much. That's too bad. All right, well, no big deal. Let's see if we got something on BTC. So the idea for some people is that if you put a buy wall up, meaning that as far as the bids are concerned, there's a very large amount that any new buyer who wants to buy would have to front run in order to buy that particular asset. So if you have an order book, man, I really want to do something for you guys. I'm sorry I wasn't prepared, so I can't exactly throw an exchange up. Or maybe I can. I don't really want to. I don't super duper want to share this information, but for educational, I'm not even logged in, so it doesn't even matter. Okay, for educational purposes, here we go. All right, I want to buy Dusk. Dusk is currently trading at 1307. Okay. The highest bid is 1304. The highest ask, or the lowest ask, is 1310, which gives us a spread of about 6. 1307 is the spot price because that was the last transaction ever made. Okay. Timestamp, boom, boom, bang, bang. Somebody said, I'll buy this. Now, when it comes to me, and I look at the chart, and I'm like, oh, dude, hell yeah. 1, 2, 3 level bottom out pattern, little J hook over here, good buy with the pullback, right on target levels, just around the 786. This is a win. You know what I mean? Like, screw the rest of the TA. I'm going in, and I want to get in on this right now. Then you would market buy. And when you market buy, the algorithm, the computer within Binance and the order book system is going to do its best to find you the lowest available ask to fulfill your order. So if my order is 25,000, let's just do 20,000. If my order is 20,000 dusk, I'm going to wipe out the 1310. So I'm going to get 8,000 at 1310. And then I'm going to pull up my other 12,000 to satisfy my $20,000 order at 1311, right? Because it's the next lowest in the book. Now, what if there was a limit order placed? And I said, I'm not paying 1310. Not when the ask is 7 and the highest bid is 4. I'll pay 4, Or since 4 is not moving, no seller is willing to sell it at 4. Let me try 5, and I'll be the highest guy in the book. And so this way, if somebody market sells, I'm number 1, get my order filled at least. And I'm just the closest one. So if there is a seller who's like, I just want to move my capital, get it out of the trade, whatever, I'm out of here. Then they're going to pick me. So I put up an order, 1305 for 20,000, and I wait, 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 and nothing happens. So maybe I change it to 1306. Maybe I change it to 1307. Maybe I'm perfectly cool with just waiting at 1305. But my order's in for 20,000. That guy who just popped in right there had an order of like 100 and something. 124. And you can tell this is a bot because this will probably flash unless that dude just screwed it. Yeah, so there he goes. It'll just flash in and flash out, flash in and flash out. And he's just hoping for, if you do that every other second and X amount of times during the day somebody market sells, right, then you have basically a 50-50 chance of catching it on that second that you're in the order, right? I mean, I guess. I think that's the logic behind it. Not really sure. So now that guy's trying to buy just 125. He would have to wait for my 20,000 to get filled. So what does he do? He front runs me at 1306, 1307, something a little juicier. So if that wall, now that wall is small at 20,000, let's say that wall was much, much bigger. Let's say the wall was 100,000. Now, any average retail trader is going to have to put a bid above that wall in order to get into the trade. The two schools of thought are, if it's essentially a buy wall, right, people have to push the price up, right, because somebody is propping the price up. Somebody's holding it up at a level because it would take 100,000 dusk order to actually fill it. So, looking around at 816, 271, I mean, you're essentially wiping the entire book visually from what we can see. So we know, the price is propped up. So long as that order stays there, if you want in on that trade, you have to front run them, which does what? It brings the price up. Because now you got to front run 13. And then, to front run that guy at 1301, and 1302, 1303. You start a trend, you start momentum, right? You start a bullish move, and then that candle starts buying, and then you get algos that'll be triggered, and then you get other retail traders that are now like, well, I got to get in because I just saw it that whole time at 1307, and now it's freaking 1325. You know what I mean? I could have been making money, and I didn't. The idea is that, so that school of thought is that it's bullish, right? Because you're forcing people to buy it higher, and you have somebody helping you prop the price up to keep it from going down. The other school of thought with the same exact scenario is that it's bearish, and you're you're having, yourself push or prop the price up so that you can get a better exit. Okay? So that you can get a better exit. You have an order up here and nobody is even looking at 1348, and you're like, I got to get rid of this, and I got to get rid of it for 48. No higher, no lower. I got to get rid of it at 48. So if I could prop the price up, if I could push it up, even if it's a fake order, I never plan on filling. I have the capital to say, bang, I'll risk whatever it is, 100,000 dusk, and I'll put the order in that, like, I'm providing liquidity, and you guys better front run me and build a little trend so that I can get my sells at 1348 filled. And then I just simply remove my wall, sell at 48, and I'm out of the trade. Good way to boost yourself. So I hope that makes sense. That's what I got for you. So, yeah. Now, the problem is they could be, like, manipulated. They could put up and put down within microseconds. You can hide orders. Like, MEX is like, I don't go on MEX for, like, reliable data. You go on MEX to long and short a couple of the majors. That's what you're doing on that exchange. All right, so spending top for sure is where we closed. Yeah, 100%. Trading activity bullish so far. Let's hit the hourly. Let's see where that brings us here. Definitely more of a diamond here. So diamonds are like this. I guess I should have drawn it last time. So diamonds, again, like, there's not a good one here for diamonds. So just take your weird poly thing that no one ever uses, that poly line, right? And then what you're looking for is, a left, a right, an up, and a down, right? That essentially builds you out a diamond. So it'll be elongated. This one will be elongated to the left side, but you'll see what I mean. So bottom, right? So left, bottom, right side price action, which essentially will probably be like the next two candles. So this is a little premature. Top side trading, and then back. Okay. Essentially what this should look like in a perfect scenario is narrow buying turning into wide buying, turning back into narrow buying. All right. So if you're familiar with music and waveforms, it would be like, somebody going like real quiet and like, and then screaming, and then fading out into the background. So you sort of have this, this like, coiled up, whoa, and then like back to coiled up. All right. That's my 100% perfect, patented explanation of diamond tops and bottoms. So a diamond top generally breaks to the downside, and a diamond bottom generally breaks to the upside. So there's your lesson on patterns. Congratulations, you have all passed Patterns 101 with Chinggis. So good job. All right, so then fibs. Yeah, so my fibs don't line up with yours for some reason. Interesting. So let's take a look at that. Can you also look into Can you also look into volumes, how to spot volumes quickly? I'm not following you here. Like, you're just looking at volume on the chart? Can we raise REN stop loss to entry? If you're comfortable with that, go for it. If it hasn't come out as an actual signal, then the analysts have decided that is not the best route. But if that's how you want to trade and lock in profits, absolutely, it's fine. You're in 30 minutes behind. Oh man, dude, 7:30, dude, Eastern time. Get into it. Great info on order. All right, cool. Yeah, no problem. Yes, volume on the charts. Okay. Scale it down, dude. Go look at a 5-minute chart. Look for average volume to break on a 5-minute chart and apply that to overall volume for what would be happening in that hour or in that 4-hour candle, and then you can sort of like accumulate that in your head to like, are we getting more volume? Are we getting less volume? Look for volume trends. That's also something you could do. All right, so we're going to talk fibs, but let's talk volume, and then we'll talk fibs. All right, so volume. Okay, so volume. Here you go. There it is. It looks nice. Clearly, on the daily, it just takes too long for you to realize, what's going on. But on the hourly, you do have some indications here on what's happening, right? So I like to use the average. It gives me a quick visual. Again, like I'm a big fan of like quickly identifying local trends, local bias, and volume is one way to do that. Now there are cats that trade with no volume, period, and there are cats that trade with only volume-based traders. All right, I'm just a hybrid of everything, so that doesn't apply to me. I like average. And I like to know that we are above average, okay? For, X amount of candles in a row does make me feel better than one candle out of, 1,000. But we can look right here. We're currently in this hourly candle. We got 22 minutes to close it out. We just opened it up at 8 o'clock. Trading now is 8:37. 3 hours ago, garbage. 2 hours ago, even more garbage. Last hour, still garbage. So far, garbage. In retrospect to the prior 4-hour block, it's like no one's even here. Everybody left. Nobody's even trading this thing. And what does that tell you for the local move? There's not a lot of weight behind it. So we opened the candle and it went bullish, right? So now we're on the hourly. Open the candle and it went bullish. Am I putting any faith into this particular candle after looking at the volume on the hourly and finding out that it's just garbage? That there's nobody pushing this up? It's the same 5 dudes playing poker in their mom's basement, just throwing money at Bitcoin? No, I'm not putting a lot of faith into this move. There's no reason I would. Now, if it was backed up with a ton of volume, well, then that's an entirely different story. Now, volume you could do a lot of different things with. It's not just volume on chart. You could do OBV, checking money flow. I mean, there's like... we'll go over like a volume lesson one day. I don't know. I might have something, but yeah, we'll if it's that interesting to enough people, we'll put something together on volume. Volume is very interesting. Very, very interesting. Fibs. One of my old faves over here. Let's take a nice clean chart. Oh, wait, it's not clean. Whatever. Don't worry about it. It's fine. Fibonacci is really super cool. So to confuse less, let's take that off there. All right. Quick lesson, and then we'll probably wrap up. First, like number one, put a fib on a chart anywhere, right? Just so you can get to the properties of it. Double click it, right click it, whatever you got to do. Click on the little gear wheel, go to settings. I don't care how you get to this window, but get to this window. All right. By default, and let's do that. So apply defaults. This is what it's going to look like by default. Visually means nothing. Okay? The colors you choose, whatever. That's all you. I don't care. You want to do one color, all black? Boom. You want to use a background on it so it's like real, like, go ahead. You want to use no background? I don't care. Whatever you do, it's fine. You want to change that trend line in the middle so you don't have to look at it anymore? Go ahead. No big deal. Whatever you want to do, that's fine. It's this That counts. Your 0 line, okay? That is considered your second anchor. Your 1 line, keeping things very easy, is considered your first anchor. So, let's just keep that for now. Let's grab it. And let's grab a whole new one. Fib. Low to high. Okay? Low to high. Anchor 1 to anchor 2. I'm going to throw this out there to keep fib super easy and just keep this fib lesson quick. And just remember that there's always alternative methods and loopholes, gray areas, fancy tips, tricks, blah, 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 blah. Just by default, remember, you will always, just about, place fibs from left to right. Okay? From historical price to more current price. That's how you'll lay your fib. Either low to high, left to right, or new fib, high to low fib. Okay? All right. Now, let's throw a fib on here. And I'm sorry, but default is like, it's disturbing how bad it is. So I'm just not going to use it. All right. So what I do is I have fibs for different reasons. I create templates, and then I can access those templates. Some examples would be better than default. So it's default, but it's better. It follows my color scheme. It brightens out the things I want bright. And of course, I never, ever, ever use a white background. So these are all designed for dark backgrounds. So this is new for me to see what they actually look like. And I'm not a fan. All right. But anyway, so you can see, like, I'll use them for bats. These are harmonics, all teal left, which is like a nice pop. That's something I use on a monthly chart. Black background. All red dim means I want it on there, but I don't want it popping out at me because it's going to screw up my horizontal support resistance. So it's just very faded in the background. Global up, global down. These are like cup and handle, super clean, slate black. Yeah, so like stuff like that. So slate, I might actually be able to get away with on a white background. So I did mess around with the slate for a little while. I wasn't a fan. Okay, it's okay. So now that you have your fib on here, and this particular fib you did high to low, what does that mean? It means you're looking for price to reverse. Okay? Let me say that again. If you're painting high to low, you are looking for this action. You are looking for future action. And because price would be going up, you're looking for areas of resistance. So now drag it over. Wow, that wasn't supposed to happen. Drag it over, and then you can apply or visually see your fib lines across the board. And then it just makes it very easy at this point to interact with your fibs. Now, another way to do that, if you want to be very exact, and if I'm not streaming, I'm to the cent exact. Double click it, go to coordinates, right? Now your price to, is this guy down here? Right? It's the lower price. Change your coordinate. Make it like, 340, whatever. Just, it was at 34, just guess. And if you don't get it, change it. You're like, it's too much, and dial it back a little. All right, make it a 24. What? I don't care how you do it. This is just an easy way to, because when you drag it, you're going to lose that exact price. So whatever, coordinates, bang, done. All right, now you're here. Now that you drew it from left to right, high to low, you're looking for areas of resistance on the way up. every one of these fibs should be an area of resistance on the way up, which in turn can be flipped to support. So price comes up, sort of dances around the 2-3. We're on a daily chart. So let's see. We came up. We kind of broke it, came back. We did a nice little retest. Right? From there, we ended up, let's see, dropped underneath it, push. So here's another tip for you guys. For you white background people, if you lay the fib on, it's like really hard to see your candles once you have the fib selected. So just right click your candle, go to visual order and go bring to front. This lays your candles on top of your fibs so that your fib's not on top of your candles, so that they always stay as bright as they can be. All right, so that's your 2-3 right here. Your 3-8 level, no respect, smashed it. Smashed the 3-8. Couldn't care less. Came up to your 5, right? And from your 5, you had a little bit of hesitation, came back, found resistance at the 5, pushed back up, retested the 5, pushed away from the 5, only to come back, false breakout bottom, and then you got like a perfect little launch pad right to the 5. Now look at where the launch pad wick right here on the 5 to right above push, right into the 618, and from there a drop right on the 618. So that's what we like to see, is respect in levels. Here's your 618, 17, 13. That's what you just saw happen. Smash up, come down, close above, acted as resistance, push back down, didn't quite get all the way down to the 5, sort of found support, structured levels midway through, pushed back up for another break, got the break, and this is a long retest. Ended up getting a retest right here. But in the meantime, that didn't stop it from testing out the 7-0. Now, the 7-0 is not, I repeat, it is not a Fibonacci level by definition. It is respected on a lot of crypto pairs, and that's why it's added to the great Fibonacci tool, but it is not a Fibonacci level per se. I do recommend putting it on and taking a look at a few pairs, and if you see the respect and the use case, then use it. If not, then leave it off. All right, so not quite an attempt to the 7-8, did hover around the 7-0, 7-0 back to the 618, that's your retest. All right, push, 7-8, clean break, smashed it, smashed the 8-8, couldn't care less. And then you got into your anchor 1. So this, your anchor, right, 1, this becomes your percent gained back. Okay? Does that make sense? The reason why you draw from left to right, and your whole thesis is you're looking to get back to your 1. That 1 equals 100%. So again, we go back to our style, and we have this little button here called percents. There you go. 100%. What does that mean? Well, now you could demystify your Fibonacci. A 236 is a 23.6% retrace. And a retrace, and this is a debatable topic, but a retrace is when price is coming back up from a downward move. And a pullback is when price is pulling back from an upward move. All right, so, apples, oranges, peas, pods, whatever. Apples, tomatoes, tomato, you know what I'm talking about. So now, when you hit this level, you regained 23.6% from what you lost at your 1. Okay? This is your 100%. When you are at the 50, you have gained back 50% from where you were. And when you were back to 100, what does that mean? You're back to 100%. Same thing if you were to draw it the other way. Okay, it's no different. Top to bottom, bottom to top. And we'll talk about bottom to top in just 1 second. All right, so now, where did we stop off? Oh, we stopped off at the 100. All right, and then we could do like advanced stuff another day. We're not going to mess with that now, but then you get into extension targets, 127, 14, 1618, and you can see like it just ended right there. Bang, bang. The 1618 is a winner. That's the golden ratio. That is your Fibonacci level of choice. And you can tell right here that was the end of this current trend. Now that we did that example, and that was fun, let's go the other way. Bottom to top. And what am I looking at? Right? If I went bottom to top, what am I looking at? From top to bottom, I was looking for resistance on the way up. Now, my 100% is at the bottom. So I must be looking for support on the pullback. And that's exactly what I'm doing. So now I take this, and now look, I'm looking at my 39, right? That's my 0 mark right here, 39. So that's my coordinate that I want to move. So I want to move 39 from bar, whatever, 229 to like 250. No, 290. That's good enough. Fine, whatever, perfect. And now I know it's perfect, right? Magnetic tool is on. Bang, bang, we're good. Everything's super happy. So now I must be looking for support on the way down. Price comes up. Now I've lined my fibs. This would be a pullback to the 236. You hear us talk about that stuff all the time. That's a 23.6% pullback to our lowest level, our local low. All right. You can see we got a reaction right here. First tested, then closed above, then found support, then found a support for another day, right? And then dropped down. Now, do you see the candles? I don't know. Did you see that? Oh, damn. Well, look, see if they're, wow. So, okay. See how the candles are like dark and uncool? And then if you hover over them, they get bright again. So just right click, visual order. Oh no, won't even let me do it. What's going on here? Yes. Right click. No, bring to front. Oh no. I can't even do it on this example. Oh, that's terrible. Sorry, guys. That's something I'll have to look. Oh my God. It's something I'll have to look into later. We're not going to waste any time on it now, though. That's for sure. Price comes down to 236. Found support. Push up, clean break. Couldn't quite make the 382. Did the next day. Right here. Right on the nose. Just like that. Let me try this. Let me try sending that to the back. It's very interesting. There we go. There it is. Okay. I don't know. Don't ask. Trading View. Got some issues. Perfect. Right here. 382. Push back up. Retested. 236. Failed. Drop back down again. Found support. 382. Pushed for the next level. The 5. Found support. Push back up. Retest 382. Hung out for 2 days. Dropped. Right back to the 5. 5 said, you know what? I'm going for the 618. Bang. Right to the 618. Stop right there. Bang. 618. Perfect. Next day up. Push all the way back up to the 5. You got the retest. Smashed it back down the next day. Right to the 7-0. 7-0 found support. Pushed all the way back up. Said, screw you, 618. I'm going right to the 5. Goes right to the 5. 5 takes it. Holds it as support. Pushes it back up. It says we're going 382. 382. 1, 2, 3. 4 days rejected, dropped right back down to the 5. 5 level holds, 1, 2, 3. 4 days and says, I can't. Drops it. Next day, finishes where the previous day started, right to where? The 618 on the nose. Pushes back up again, can't quite make it, so now we have structure median levels. Drop back down again for support one more time on a 618. Another rally comes in, smashes up to the 5. 5 says no dice, drops it back down. Median level support again, pushes with a clean break, which is what we like to see. On the 5, attempt for the 382. Again, double top and a drop. Brings it back down to the 5. 5 to a median structure. Median structure drops back down. Says, screw you, 5. I'm not even wasting my time with you. I'm going right to the 618. 618 pushes back up again to the 5. 5 says no dice, not this time, not going to happen. Go back to the 618 where you came from. Here you go. Back to the 618. 618 holds it 1, 2, 3, 4 days as support, flips it 1, 2, 3 days as resistance, says screw you 7-0. I'm going right to the 7-8. It does. 7-8 skipped over, and now we're pushing to the 886. Okay, support, resistance. Future price based off of previous impulse moves on a scale from 0 to 100 with extensions using the golden ratio numbers in sequence. That's Fibonacci. That's how cool it is. And another day we'll go over like extensions and price discovery to the upside and you know, stuff like that. All right. Cool. So I hope that helped. Whoa, 9 o'clock. All right, so we're going to wrap this up. Yes, the volume on charts. Yeah, volume lessons will be help. Okay, cool. All right, so I hope you guys, let's go back. All right, so Bitcoin USD, let's just see what's shaking. You know what I mean? We haven't talked about our little buddy in a little bit. So last time we were here, we talked about how the volume was weak and put no faith in the upside move. It is coming down now. 4-hour block structure is okay, right? You sort of got to push to the downside with a push back up. Top side is now resistance level right here. So, this is, again, pretty local. But for now, you could paint this picture as a resistance level. This is an area that has proven to be difficult on the 4-hour chart to get a close above. So a break and close above that on the 4-hour does, all of a sudden change things. On the downside, your like average median trading is happening right here. This little build out over here sort of throws everything down, and this action is so high up that it's kind of irrelevant. I would be looking at this first. Maintain resistance levels here for a further push to the downside. All right. So that about wraps it up. I hope you guys, learned something, enjoyed it, got some answers, questions answered, all that stuff. It's the awesome explanation, and I found out my fib was messed up for some reasons. Fixed it by resetting it. That's what's up. That's what's up. Cool. Very cool. There, you could go deep into fibs, and I did. I went, not here. I mean, I personally went deep into fibs to truly understand what they are, how they work, all that jazz. Really fascinating stuff. Some people just call them like, voodoo magic lines, and that's cool. I just probably won't invite them to the dinner party. But they're, perfectly fine people, and they have their own opinions. I've seen time and time again where they have reacted well. You don't necessarily trade off fibs. Some people do. But more as like a confluence. It's the same as RSI, same as MFI, OBV, the Arun, any indicator, moving averages. There are strategies from which you use that as your sole pivot point. That's your entry, that's your exit, that's your profit target, and that's super cool. And those guys are probably really profitable. And then there are other guys that just use that amongst other things as confluence. So when I see 3 or 4 things that I really like that are all adding to the bias of support, and it all happens to be on a 618 after a pullback move when previous historical data on that chart has showed 618 as a pivot reversal point 3 or 4 times prior, I'm feeling pretty good about buying the 618. Clear invalidation levels, you start trading under the 618, you're out of the trade. no harm, no foul. Yeah, I mean, you'll get stopped out and you'll lose a little bit on the trade, but if it's profitable 8 out of 10 times, even 5 out of 5 times with proper risk management, then it's a win, and you're doing great. All right. So tomorrow, monthly candle close. I understand it's Saturday night, so you are not. Maybe you'll watch the playback. Maybe you'll join us live. Whatever you choose to do, awesome. We will be there. And we will talk about that monthly close, what it means, how it looks, what we're looking for in the future, and yada, yada, yada. And we could do that with a bunch of charts. We don't just have to look at Bitcoin monthly. Well, we could look at a bunch of monthlies and sort of see how they're all panning out. All right, so hope everybody has a great night. I'll see you guys in the Discord. Pop in here and there. Of course, if you need me, tag me. That's how I see. That's how I see things quickly. I'm sure most of you know there's a lot of things happening, so I can't read everything. JC reads literally every word in the Discord. I can't. But when I do see that I'm tagged in something, I do try to make sure I find time to read it, look at it, and answer appropriately. All right. So I hope everybody has a great night. I will catch you guys on the next one. And until then, happy trading.